G'day legends and welcome back to another video. Bitcoin has seen a relatively strong bounce thus far after closing its weekly candle and 2-week candle above the 50 EMA, the Gaussian channel lower band, and the leading span B of the Ichimoku cloud. This reversal has resulted in a bounce from around 80,000 up into the $90,000 range, perfectly retesting the next point of resistance at 90.5 to 92.5. In today's video, we are going to be discussing exactly what this bounce means, how much higher could it potentially move, where Bitcoin is likely moving to over the next coming weeks, and how the next leg toward the downside will likely begin. We'll be reviewing macro data, historical price action, and the short-term charts in extensive detail. Before the end of the video, you'll have a very well-rounded understanding of not only what is happening, what is likely to occur, but what the historical data is suggesting for the next move in this bear market. Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin, focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. And if that is the kind of content you are interested in, you can join us on Telegram. That is the first link down below, getting access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. Let's go ahead, guys, and jump into the content. So as we can see, and as we have been warning for a few days now, we were discussing the potential for a bounce for Bitcoin following a similar pattern we noticed through the prior bear markets. And that pattern was essentially after we created that macro top according to the 1064-day bar theory. We saw a relatively fast correction to the 50 EMA on the 2-week, representing complete mean reversion, which from that point onwards, we began to see some sideways consolidation, suggestive of a little bit of bearish exhaustion. This bearish exhaustion was by no means macro bullish, it was just a stopping point during the downtrend in the larger macro bear market before the next major leg down. Taking a look at the prior cycles, we can see retest of the 50 EMA, retest of the 50 EMA, retest of the 50 EMA, and yet again a retest of the 50 EMA. Each time we saw a period of consolidation develop from that point prior to eventually breaking that level and then entering that next leg toward the bottom. This is a pattern we have been discussing, and so far the pattern has played out very well with nearly a $10,000 bump in the price of Bitcoin. We'll be discussing what it means today in the video, as well going over all the facts, all the data, and discussing what to anticipate next with not only the macro expectations, but really this short-term move now that we have pushed into resistance. Will this move sustain, or are we just going to see a crumble into these lows? Let's take a look at the market data. Taking a look at 24-hour liquidations and volume down 4%, 258 billion, liquidations down 9%, 273 million, majority of those liquidations in the 200 million coming from short positions as Bitcoin and the broader market takes a little bit of a move toward the upside. You can see Bitcoin and Ethereum leading the way here with total liquidations. Moving over to the DXY actually pushing down a little bit as the probabilities for interest rate cuts in December actually begin to lift again. Now, the market may be doing two things. One, it might be pricing this in, meaning this bounce we are seeing here could be the extent of it. This could be it. We might not see any continuations higher. Or we could be preparing for an interest rate cut, which is a reversal in this trend. Now, how high will this reversal take us? Will it break the downtrend? These are questions we answer today. The answer to that very quickly is unlikely, but we'll go over that anyway in today's video. But it's something to keep in mind as the probabilities of rate cuts increase, the DXY will likely see a pullback. And as we mentioned, if we see rejections from 100, as we've been discussing through the whole week, we will see some short-term relief for cryptocurrency, for the S&P 500, and that is pretty much exactly what we have seen. We have seen some short-term relief, particularly here for the S&P 500, actually pushing back up to now retest this downtrend. So with the S&P 500 retesting resistance, with Bitcoin retesting resistance, there is a chance that this rally, on the short term at least, is actually coming to a little end, and we are going to see rejections develop again. As you guys already know, the S&P 500 is in a downtrend represented by this downtrending diagonal trend line. Provided we remain underneath this downtrend and underneath 6,900, the expectations are continuations lower. And that is provided the economic climate doesn't shift too much. We already know, guys, that economic policy is one of the main drivers of price action. So when we see that economic policy adapt and change, the market is going to obviously adapt and change and respond accordingly. So if we do see interest rate cuts, we see a massive narrative shift away from uncertainty into aggressive interest rate reductions, yes, there's a very good chance we actually see new highs for the S&P 500, and we might even see Bitcoin rally. Now, will Bitcoin go to new highs? That is something we'll discuss. I think it is unlikely unless we see a dramatic shift in economic policy. But nevertheless, we have to understand that policy drives demand. So it is above all one of the most important aspects of the market. When we're looking at the rest of the charts today, guys, we'll be diving deep into the short term, even the immediate short term, discussing, this rally. Is this going to sustain? We'll talk about where we could see corrections to as we are at resistance. And then we'll discuss the macro charts and everything you need to know. Before we go ahead and get into all of that, make sure to go ahead and sign up to BitGet, BitUnix, and BingX. Those are the exchange links down below. You'll get a lifetime trading fee discount of 15% off all your trading fees. You'll support me making the content, and you'll support yourself trading on exchanges I use and I trust. Go ahead and check it out. We'll play an ad and we'll jump right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump back into it. Now, really quickly, I do want to mention that our monthly promotion has literally just finished. It finished 10 minutes ago. This was our $60,000 monthly promotion. We ended up giving away $30,000 of that this month. We do have another promotion starting very, very soon on BitUnix, where you can get access to a variety of bonus rewards, including up to $100,000 sometimes every single month, which we give away for you guys on this community. So check it out. We'll, of course, link everything down below to check it out. Also, the pinned comment in the free channel, you can find out more information. Let's jump into it. So, as we know, Bitcoin has seen a bounce. I want to take a look at these levels because these levels are the most important levels that pretty much I don't think many people are discussing. Maybe some more people are discussing it now since we have seen a bounce and the historical patterns becoming a little more obvious. But I want to talk about it because not only is this a major point of support on the macro, it is literally the trigger point for when the next macro move downward will begin. So by identifying this level, we can essentially get ahead of the curve for when that next correction comes, which will likely be a correction to the absolute bottom, right? We've only got one more major leg down in the bear market, and that major leg down begins when these key trigger points are lost. Now, these key trigger points are going to be represented by the leading span B of the Ichimoku cloud, the weekly Gaussian channel low, and the two-week 50 EMA for Bitcoin. Now, we don't need to see a loss of all these levels at the same time. Of course, the 2-week and the weekly chart do not always close on the same week. We just need to see the breakdown of one set of these. The reason I say one set of these is because the Gaussian channel lower band and leading span A generally hug each other relatively tightly, and then the 50 EMA on the 2-week is generally sitting slightly above those 2 points. So when we're looking at the weekly and 2-week chart, let's take a look at the 2-week chart first and foremost. As we mentioned in our introduction, after we see the macro top according to the 1064-day bar theory, again, for those of you who do not know, we've gone through all the mathematics on this channel discussing the 1064-day bar theory. We talked about this in 2023, in 2024, predicting the exact top to be the 6th of October, 2025, and that actually played out perfectly. Since then, we have seen around 35% pullback for Bitcoin. Now remember, a 35% pullback for Bitcoin is actually a significant amount. This is by no means a small correction for a $1 trillion asset. This is a massive correction. We look at the bear market expectations, right? The expected bottom for Bitcoin in the bear market this cycle will be anywhere between 52,000 and 36,000. How we came up with those numbers, essentially we're looking at the last prior bottoms. Every single time we have broken the lower band of the Gaussian channel and consolidated below or just seen a liquidity grab below. That means a minimum we would see a liquidity grab to 52,000. And a worst case scenario, we could see low consolidations taking us to around 36,000. Now, if we use those two numbers at the moment as a rough estimate for where the bottom will be, and then we take a look at the drawdown percentage from the maximum price of 126,000 to the current price, we saw a 36% pullback, extending that to 52,000. We saw 60%, extending that to 36, 70%. So at best, we have already seen a 50% pullback of the bear market. Half of the corrective move from the top to the bottom has already happened in terms of percentage change, not in terms of dollar value change, in terms of percentage change. Meaning the the bear market has progressed actually quite rapidly in just a 2-month window, not even a 2-month window of what is expected to be a 1-year bear market, meaning we are likely going to see some sort of consolidation and bounces develop through this downtrend. We talked about this a few days ago. We talked about how just as when we have uptrends, consolidations and small short pullbacks are normal, it is exactly the same when we have downtrends. Bounces and consolidation periods, okay, where we just see a consolidation or a bounce, these are also completely normal. This doesn't necessarily mean the strength of the trend is shifting or the reversal is coming. It just naturally happens in macro trends. We see periods of consolidation where buyers try to absorb the selling and reverse the price. If they exhaust, we see continuations lower. It is what we generally expect to see. So we cannot go off this bounce alone and say, well, this is the exact bottom, this is it. We have to look at it from a perspective of we are seeing a large correction into a key level of support. We are seeing some buyers step in and some selling pressure absorb, which means we could move into some period of consolidation, exactly like we have seen in the past. Again, the prior instances, consolidation. Now, the key point was when the 50 EMA was lost, we saw the next major leg downwards, mass capitulation into bottoms. That is what we are watching out for very importantly. Let's move over to the weekly chart because a very similar pattern is playing out on the weekly chart with two indicators. Firstly, the Gaussian channel lower band. If you take a look at the Gaussian channel lower band, we broke it over here, moving back to the prior cycle, and we broke it over here. What do you notice after we broke the Gaussian channel lower band? Well, we simply saw mass capitulation. We saw an aggressive downtrend resume. Now, taking a look at these percentage corrections, that was a 53% correction. That here was a 40% correction, and that here was a 54% correction. These are massive percentages, right? When we're looking at corrections for what is a massive asset, not particularly back in 2015. In 2019, but looking 2022, a 50% correction from 35,000 is quite a steep correction. If we saw a similar move of around 50%, we could see a move all the way down into that $36,000 target, which again would be a significant correction for Bitcoin. That would likely happen when the weekly Gaussian channel is lost. Another reason why we are paying very close attention to it. And then finally, the next trigger point is going to be the leading span This is going to be on the Ichimoku cloud indicator. Let's go ahead and bring this one up very quickly. Sorry, the leading span B, which is going to be the lower red line. You can see this red line here. Historically, when we have broken below, I'll just go ahead and draw it out. You can't really see it over here. Historically broken below it over here. And historically broken below it, let's go ahead and draw it out over here. We have seen these steeper downtrends commence. Okay, so this is of course another major weekly trigger point which could result in corrections. So that is, to sum all that up, that is why these weekly levels are important. That is why not only are we watching these levels very closely for the next leg down, which could take us into the bottom, right? But we could see some sort of bounces develop from here, which actually may last longer than just one weekly candle. We might see a few weeks. We might see a few months of up and down consolidation, between these levels, just chopping sideways before we then eventually break down. It's very hard to say for sure. Or we might just see one stronger move up and then a slower grind back down, which we eventually break down and see consolidation, and then we see that capitulation. Either way, this is going to be the level we need to watch. It doesn't really matter what happens. This is the level we need to watch very, very closely, which is going to be the Gaussian channel, the 50-man leading span B. When those levels break, expect continuations lower. Now, when we're looking at the short-term price action, we have to take it from face value. There are definitely some good things happening, and we have to be honest about that. But there are also some bad things that are happening, which we'll talk about too. So let's start by the good things. What good things have happened over the last 24 hours? Number one, and this is really the only one really, we have seen a positive momentum shift on the RSI. So when we take a look at our momentum, we are looking at visible ranges being this range of price action, right? We're looking at the momentum from the 6th of October to that local low. That is the momentum we're watching. If we look at that on the RSI, we can see a very clear downtrend developing from the highs on the RSI, and we've actually broken through a level. So we've got a positive momentum shift. This is a good sign, a positive momentum shift. But when we look at reversals, we look for three metrics. We look for, again, strength, structure, trend. Strength is reflected by, of course, one metric, which can be momentum. We have got a tick there, right? We've got positive momentum now. This is the first time on the daily chart we have positive momentum, essentially since October 6th, right? We had no positive, we have negative momentum this entire time. So a good sign. When we look at structure, we still don't have any bullish structures developing. When we talk about structure, we can talk about patterns, or we can take a look at the actual structure of the price action itself, which is highs, lower highs, look at lows, lows, lower lows, lower lows. We still have a bearish structure, a bearish trend for the price action. And then when we look at trend, the trajectory of the price action represented by a diagonal trend line is downward sloping, so we do not have that. So even though we have seen a positive momentum shift, this is not enough to be entirely confident that this is just going to continue aggressively upwards. Not yet, at least. What we are also seeing is the price action is now retesting a major point of resistance. This is the 90.5 to 92.5 resistance. If we are going to see rejections from the $80,000 low, it is likely going to happen here, which could take us into smaller rejections, consolidations, maybe continuations, and then back down. Some sort of consolidation will likely occur. But if we are going to see rejections on this move upward, it is likely we'll see immediate short-term rejections develop from the 90.05 to 92.05 level. If we break that level, we are then watching for retests of this steeper downtrend, and only upon the break of the downtrend would we actually anticipate stronger, higher time frame reversals. So the trend is still bearish. Let's move over to the immediate price action. I want to come down to an hourly chart now. Let's take a look at this rally for what it is, guys. As we can see, we've come up into this point of resistance. It is quite a large point of resistance. We saw some larger sideways consolidation develop around there prior. Of course, when we finally break that level, we saw larger corrections. In terms of the price action here, guys, we can see we have actually retested 90.05 basically on the dot. Now we are retesting this if we go to a shorter time frame chart, on like a 30-minute, with weakening momentum. So you can see already we have a bearish divergence. Okay, momentum is facing downwards, price action are making higher highs. This is a pretty bad sign. We do have change of character sitting as a temporary support around 89,000. And then of course we've got that low here, 88,000, which is represented by the VRPV gap low on around the 1 hour chart at again around 88,000 at the break of structure. So what we are anticipating is, again, provided momentum remains negative here, okay, meaning on the 30-minute chart, we are watching that downtrend in the RSI. If it ticks back upwards, we will see another rally. If it remains under that downtrend, expect corrections. We would be watching for moves into change of character, 89,000 as a pullback, so that's a negative $1,000 pullback right there. and 88,000 as a potential pullback, so negative $2,000 pullback on the market price for Bitcoin. If we want to see steeper corrections, we will need to break underneath the respective lows we have established in its range. We need to lose around this $86,000 level. We break that, we likely correct back into 82, 83, 84,000. But at the moment, we have established some levels of support on this move up, and we've got some key liquidity levels we need to break down. So although we are seeing weakness develop in this short-term rally, there is a chance at least this weakness will not dissipate on the higher time frame immediately. We will see short-term corrections followed by consolidation, maybe another rally, etc., before we eventually see that correction back down. So we need to look at that at a face value and accept that this was a local bottom, exactly as the historical price action suggested, but it doesn't mean it was the bottom. And that is a very important distinction you need to make in the price action. Remember, you can have bottoms on macros, bottoms on short terms, and they're not the same thing. So when we look at the price action here, we're watching closely, watching for short-term pullbacks. We are watching our trigger points in the weekly. When these levels break, expect the next leg down. Until then, we are trading the short term from an invalidation approach, okay? A lot of people entered shorts down over here, expecting the bear market to just continue forever. Like we said last week, do not expect the trend to just continue downward forever. It'd be unrealistic. We will likely see bounces along the way. We will likely see consolidations along the way. So let's talk about the last most important thing. How high must Bitcoin go to invalidate the bear market? And the answer to that is actually really, really simple. The answer to that is 108,000. If we break over 108,000, the probabilities for upward continuations above the prior all-time high become greater than continuations back below the prior lows. That is when the bear market likely breaks. Will that happen? I don't think it is likely unless we see a dramatic narrative shift economic policy. When we look at the 4-year cycle, we have to understand that a 4-year cycle will eventually break, right? This isn't like written in stone. It's not going to continue forever. Based on our probabilities, we did a complete probability assessment over here for what the cycle would break, how it would happen. There is still around a 30% chance the cycle breaks. Okay, so essentially what would need to happen for the cycle to break from a 4-year cycle perspective, we would need to see a new top for Bitcoin prior to the 5th of October 2026. If we see a new top for Bitcoin, new all-time high for Bitcoin before that date, then the 4-year cycle breaks, and this 1,064-day pattern, this 1,440-day pattern, the 4-year cycle, as you'd like to call it, will be invalidated for the first time, and thus we will be likely entering a new cyclical macro trend. It doesn't really matter though, because remember, profits are made on your short-term decision-making, not made following the macro charts. We focus on our day-to-day decisions. That is how you trade. You trade level by level. So regardless of what happens there, it doesn't matter. It is nice to have these macro patterns in place because they add some degree of perceived predictability. And I say perceived predictability because nothing is certain, and it does provide some sort of overarching flow to the charts we can analyze. If we lose that, well, then it does become a little bit more ambiguous on the macro chart, even though it is already ambiguous. It is to perceived predictability. Cycle trading is not objective. It is to some extent diagnostic. It is not predictive by nature. It is what we call it. It is deterministic. That's the word I was looking for, not probabilistic. The market is probabilistic. It moves based on probabilities. It is not deterministic. It doesn't move based on these set structures and patterns that have to play out and will play out indefinitely. So the 4-year cycle will eventually break. We do have to consider that. But when we're looking at everything else, so we just delete the 4-year cycle and we just look at the macro trend, that doesn't take away from the key levels that we've talked about, like the Gaussian channel low and the 50 EMA on the 2-week and the leading span B. These levels are still significant because we're still seeing significant reactions in the price upon the loss of the levels because they represent significant shifts in the overall macro strength of a trend. And when we see those significant shifts happen, the probabilities then change because the market is probabilistic. So thank you for tuning in. Catch you guys in tomorrow's video. We'll discuss more of the short term tomorrow. We'll discuss total cryptocurrency market cap tomorrow as well. Nevertheless, I'll see you then. Have a great day. Bye.